This is the AI News Flash for May 26th, 5 p.m. UTC. First up, according to a Wall Street Journal exclusive, SpaceX's AI strategy has reached a critical struggle phase, signaling that Elon Musk's grand AI empire vision integrating space and AI has stalled. The Starlink satellite constellation-based space AI data center concept, the Grok AI military satellite integration plan, and the post-XAI SpaceX merger physical AI robotics integration vision have all been significantly delayed from initial projections. XAI has clearly fallen behind the US AI Big Three of Anthropic and OpenAI, with Grok's federal market usage rate remaining low compared to OpenAI and Anthropic's overwhelming share. SpaceX is targeting a NASDAQ IPO in June at a $1.75 trillion valuation, aiming to raise $50 billion in the largest IPO in history, but fundamental questions about the value composition of its AI business have emerged as institutional investors' biggest concern. Despite XAI Memphis Data Center 100,000 GPU Foundation Colossus AI supercomputer efforts, overcoming the performance gap with OpenAI Anthropic frontier models appears difficult. Under the hyperscaler, four companies combined $725 billion capital expenditure boom for 2026, accelerating US-led AI infrastructure trends. If SpaceX's AI lag continues, there's a significant downward revision risk to IPO valuations, with failure to secure security AI contractor status from the Trump administration positioned as a critical 2026 US AI geopolitics turning point. Second, according to FedScoop exclusive reporting, the U.S. Department of Defense has officially requested approximately $30 billion in fiscal 2027 budget for building a new AI arsenal, reaching a critical milestone in the global defense AI market hegemony race. The Pentagon's AI arsenal strategy centers on full-domain AI implementation, including autonomous drone swarm command and control, AI decision support systems, automated target identification, AI-driven cyber operations, and real-time battlefield analysis. This represents a decisive expansion of the US-led AI infrastructure trend into the military domain under the hyperscaler $725 billion capex boom, aligned with Palantir Maven Smart System, Pentagon AI deployment, Anduril $61 billion valuation, Shield AI $12.7 billion, and the defense tech investment boom. This unfolds amid Anthropic versus Pentagon supply chain risk designation court battles, Google Gemini classified network deployment, OpenAI Pentagon contracts, and XAI Grok military AI contracts, with Pope Leo XIV's Magnifica Humanitas encyclical autonomous weapons concerns creating a direct opposition structure. Positioned as central to U.S. defense strategy against rapid Chinese military AI development, the over $30 billion AI arsenal build-out for fiscal 2027 reaches unprecedented scale, alongside G7 Joint AI SBOM guidance, EU AI Act, and 38 U.S. states' AI regulations, forming global AI governance frameworks. This positions as the most important 2026 defense AI market turning point and historical milestone in U.S.-China AI arms race. Third, according to Yorick Alert reporting, the medical AI implementation frontier has achieved breakthrough research results in cardiac arrest care, marking a decisive milestone reaching new dimensions in medical AI implementation. AI models equipped with prediction capabilities for initial cardiac arrest, patient diagnosis, and treatment responsiveness, integrating ECG vital signs, clinical data analysis for real-time decision support advancement, aim to dramatically improve cardiac arrest patient survival rates. This represents a decisive shift to full-scale medical AI predictive diagnosis, accelerating the AI preventive medicine market to the predicted $25 billion by 2030. This aligns with the medical AI implementation acceleration trend, including FDA-approved medical AI devices exceeding 115, Tempus AI genomics cancer diagnosis, Roche PathAI $1.05 billion acquisition, Anthropic Coefficient Bio $400 million acquisition, and Cleveland Clinic Aspira partnerships. Medical AI is expanding from diagnostic assistance into cardiac arrest care under the hyperscaler $725 billion capex boom, driving full-scale growth in medical AI implementation frontiers. With over 350,000 annual cardiac arrest deaths in the U.S. and millions globally in this life-saving medical domain, full-scale AI implementation has arrived. Early adoption is accelerating at major U.S. medical institutions, including Johns Hopkins, Mayo Clinic, and Cleveland Clinic, positioning this as the most important 2026 medical AI cardiac arrest care turning point and critical milestone. Fourth, according to CNBC exclusive reporting, Bank of America's latest investment analysis report positions Apple as the ultimate winner in the U.S. AI market with an officially bullish view, signaling a fundamental shift in institutional investor sentiment on AI investment themes. Bank of America's analysis centers on the AI market's transition from the massive infrastructure investment phase to the consumer device layer full-scale adoption phase, where Apple's overwhelming competitive advantage will manifest in this structural shift. Leveraging its 2 billion active iPhone user base globally, Apple's on-device AI implementation moving into full force with proprietary AI services integrated with ChatGPT and Google Gemini could rapidly establish a mainstream position. Under the hyperscaler $725 billion capex boom and NVIDIA's $5.5 trillion market cap monopoly structure shifting to diversification, Apple's independent strategy with AI consumer device layer full-scale adoption represents a decisive signal. The iPhone 17e low-price model, new MacBook Air M5 MacBook Pro M5 Pro, conversational Siri, iOS 27 Gemini integration symbolize Apple's full-scale AI counterattack. Against the backdrop of institutional investor AI bubble concerns, including Michael Burry's $1.1 billion put option, Norway's government pension fund 35% loss risk, and Bridgewater's danger phase warnings, Apple's consumer device AI implementation independent path establishes a safe asset position, positioning this as the most important 2026 AI investment theme turning point and critical milestone. Fifth, according to 24/7 Wall Street exclusive analysis, U.S. major corporations' simultaneous AI-driven workforce reductions and billion-dollar shareholder returns reveal a structural duality reaching a critical phase, signaling fundamental questions about corporate governance in the AI era. U.S. major corporations executing large-scale AI agent business automation workforce reductions while simultaneously maintaining billions of dollars in dividend and share buyback shareholder returns clarifies a structural choice prioritizing shareholder returns over employee reinvestment of savings from AI cost reduction. This aligns with the financial industry AI-driven workforce reduction trend exceeding 158,000, including JP Morgan 200,000 LLM deployment, Citi Gemini integration, HSBC 20,000 cuts, Morgan Stanley 2,500, Commerz 3,000, Block 4,000, and Salesforce 4,000. Under the hyperscaler $725 billion capex boom accelerating, AI-related stocks' $10 trillion market cap extreme concentration structure progresses with NVIDIA's $5.5 trillion monopoly diversifying. Combined with Goldman Sachs's 300 million global jobs AI automation impact forecast, 44% legal industry automation risk, and Dallas Fed data showing 13% youth AI-related job decline, the AI labor market disruption trend deepens severely. The AI era corporate governance fundamental opposition structure manifests with worker reinvestment versus shareholder return prioritization, triggering corporate value creation philosophy reconsideration. With AI employment policy positioned as the biggest 2026 midterm election issue, U.S. major corporations' AI implementation strategy faces full-scale social responsibility and accountability challenges, positioning this as the most important 2026 AI-era corporate governance turning point and critical milestone. That's all for this AI News Flash.